morning, good afternoon, whatever time you're watching this. Hi everyone. This is Moving Home with Charlie. I'm Charlie Lambden, and today we're going to be going through Zoopla's February house price index to see what we can take away from it and see if it can help us with our moving decisions. And in particular, looking at the divergence between house prices and flat prices. Now, the Zoopla house price index, in my estimation, makes the biggest effort to actually provide something accurate and meaningful for a number of reasons, right? It's still a national average with all of the weaknesses that has, but in many ways, I think it's the most helpful and definitely seems to be the one that makes the most effort, especially when you compare it with, for example, the ONS, which, as I put a tweet out a couple of days ago, the ONS, I asked Grok AI, and this is what it said. It seems likely that the ONS is comparing unrevised with revised estimates, reporting 4.6% annual growth, which may overstate the growth. Research suggests that comparing apples with apples would show a growth of about 2.3%. This evidence leans towards the ONS revising past data downwards, which could mislead the public about housing market trends. There you go. Was that on the screen when I was reading it to you? Anyway, that's why the ONS, which has certain things about it that can be useful, is not to be relied upon for overall market trends. Okay, that is an AI deep search into their numbers, and it says exactly what I said. Their 4.6% annual growth figure most recently was actually only 2.3%, which leads us nicely into Zoopla's, where Zoopla's figure is 1.9%. All right. So you can make of that what you will, but Zoopla is saying 1.9%. ONS apples and apples is 2.3%, not 4.6%. So when the ONS is saying house prices are going up 4.6%, no, they really, really aren't. And none of the other indices are suggesting that they are. Okay, let's get into it in a bit more detail. And just before we do, I want to read you what it says at the bottom about their methodology, okay? The Zoopla House Price Index is a repeat sales-based price index using sold prices, mortgage valuations, and data for recently agreed sales. So this is a massive improvement over what Rightmove does in terms of trying to get more accurate. It's still national average, but they also provide us a breakdown by property type as well as region, which is also helpful and worth going through. So this index uses more input data than any other and is designed to accurately track the change in pricing for UK housing. It's revisionary and it's not seasonally adjusted. Okay. So let's just run through what it actually says, running from the top, and what we can infer from that. So sales agreed, so that is before they've actually completed, are 10% up year on year. This is their February. This is for the 4 weeks to February the 19th. Okay. But 11% more homes come to the market. So that means that the supply of new homes coming to the market is still faster and growing faster than the number of sales being agreed, right? So this is activity, not price. House price inflation ticks lower to 1.9%. Now that is nominal. And as we know from the government's headline figures, that inflation is 3% CPI and 3.9% CPIH, in other words, including housing costs. What we've got here is that house prices are going up nationally on average, according to Zoopla, at half the rate of inflation. Okay, so that means house values are declining. Inflation is eating not only our currency value, but also our house values on average across the whole of the UK. There are regional variations, of course. And they're pointing out the fact that this is higher mortgage rates, but they've cut the Bank of England base rate 3 times in a row. What do you mean higher mortgage rates? That's because base rate cuts don't translate automatically into mortgage rate cuts, as everyone's finding out to their cost. And rising buying costs from April, that's referring to stamp duty, right? So they're referring there to a drop in demand because of the looming stamp duty increase. There's a rapid growth in the number of flats for sale. 14% more flats coming to the market compared with this time last year, versus only 5% more houses. So the rate of growth, the speed of growth of properties coming to the market is almost 3 times higher with flats than it is for houses. And you can do the maths as to what that means for flat values versus house values. And if you're trying to sell a flat, this is bad news. And it was absolutely predicted as landlords across the country sell up in ever growing numbers. And landlords mostly have flats rather than houses. The value of houses, now that's not quite true because he actually means the price. The value should take into account inflation, which it doesn't. The value of houses has increased 24% over the last 5 years. So that's house prices as opposed to flat prices, which have only gone up 7% in the last 5 years, right? So the value of flats have seen 7% growth. And again, I would call Richard out and say he actually means price, not value, because value should include inflation. And let's just quickly see what inflation is for the last 5 years. I should have this to hand, but I mean, it's going to be a lot more than that, isn't it? Let's just see. Should have had this ready before the video. Okay, so for a rough cumulative perspective, if you compound these annual rates, prices increased by approximately the same amount, 24%, over the 5-year period from 2020 to 2024. So what that's telling you is that the value of houses after inflation is unchanged, and the value of flats after inflation is 7% minus 24%. So what's that? 17% shrinkage in the value of flats over the last 5 years. Okay, because that should be the price of houses has increased 24%. Here we get to the interesting part. The price gap between houses and flats is now at a 30-year high, with houses worth nearly twice the price of flats. That's perhaps unsurprising. Buyers are still prioritizing houses despite the low prices of flats. Now, he doesn't mention it, but this is fairly obviously to me to do with people being terrified of leasehold, right? Flats are almost all leasehold flats. Mortgage repayments for a flat are currently 43% lower than rental costs. Interesting. That's national, I suppose. That means that because the landlord is responsible for service charges on a leasehold flat, not the tenant. So it really is a bad deal. So no wonder so many landlords are getting out. And strong earnings growth, this is in wages, is supporting activity, but a greater supply of homes for sale is expected to keep price inflation in check, which is his way of saying don't expect house prices to go up anytime soon. The average house price in the UK is 267,000 as of January 2025. Now that's interesting because do you remember what the ONS did just last week? The ONS revised the average UK house price down from 292,000, was it? Or 290,000 to 268,000. So kudos to Zoopla. Right? The ONS has now rounded itself down £22,000 or 7 or 8% and is now in line with Zoopla's. Okay. But they're expecting average UK house price to be 2.5%. That does not mean that all prices will rise 2.5%. Do not think that average means all. Do not think that average means typical. Do not think that average means that's what's happening everywhere, because it doesn't mean any of those things. It means when you mix together all the ones that have gone up and all the ones that have gone down and all the different countries moving in different places, the overall average calculation, which is a single number, might be they're projecting 2.5% by the end of the year, well below inflation. So they are projecting that the average UK house price will not go up by as much as inflation. Now, interestingly here, they do a nice, this is the only one that really breaks down by property type, okay? Detached houses, flats, semis, and terraced. What you've got here is that flats only went up 0.5% across the country in the last year. Semis and terraced went up the most at 2.8%. 2.8%. Detached houses went up at 1.7%. It's saying here on average across the UK. But this is again wild regional variations. Okay, so these four are, that's buyer demand is up 11%, number of sales agreed is up 10%, flow of new supply is 10%, stock of homes for sale is 11%. All right, so that's activity, not prices. Activity being up 10 or 11% more than a year ago is welcome, but is not great. And transaction volumes could and should be much, much higher than they are. And I worry that transaction volumes are going to fall once the stamp duty increase hits on the 1st of April. They don't talk about fall throughs here at all. All right. While activity increases, annual rate of house price inflation is edging lower. All right. Stamp duty impact starts to feed through. The moderation in house price inflation may also reflect buyers starting to factor in higher stamp duty rates. From April, half of homeowners will have to pay an extra £2,500 per purchase, while another third will be paying up to this level. So that's half and a third. That means most people buying are going to be paying more stamp duty. 40% of first-time buyers will be paying more stamp duty, up from 20% today. So that's a doubling in the number of first-time buyers. Home buyers will expect to reflect this extra cost in their offers, typically looking to split the cost with the seller. Yeah. All right. So, do we have any thoughts and comments and questions on this from people? Hello, everybody. Tina Fey, Carlos Zero Sum Equation, Patricia, John HS, changes coming. Hi there. Yeah, Rightmove. Excuse me. Rightmove calling for small stamp duty extension deadline. No. Shut up, Siri. And I agree with Alex Browning. They should stop messing around with stamp duty. It is grossly unfair. But with all of this being said, the biggest problem that we have still remains overvaluing. Did you see that story out today that Jefferies stockbrokers say that Rightmove's share price is 24% overvalued? I thought to myself, well, that's karma, isn't it? Rightmove is arguably the biggest contributor to the overstating excess of overpriced homes, because its house price index only includes asking prices of unsold properties. It couldn't be more unrealistic if it tried. It's quoting a segment of prices that have nothing to do with actual house prices and transaction prices. So, and that is why most asking prices are wildly too high, like 20% too high. Most, not all. Do not think that I'm saying you should offer 20% below asking on any property. It always depends on the individual property, and it's also, that's a much smaller overvaluing margin at the lower end of the market. But guys, that was it. I wanted to do a quick update on Zoopla. I did actually, I think I whipped past that graph about here we are. I should share this with you about house price versus flat price. All right, this is interesting, and this goes back 30 years, but that gap has grown and grown and grown and grown. Well, if you think that's a pretty even division between freehold versus leasehold, it's unsurprising that leasehold prices are eroding compared to freehold prices. How does that make you feel about buying a flat versus buying a house? One of the comments that Richard Donnell makes on this is that it means that there are actually some quite good opportunities for well-priced flats. Well, that's if you exclude the effect of leasehold and service charges. Comparatively, do some of them look cheap? Yes. If you're owning a flat and trying to sell a flat, it is not good news, all of this extra volume of flats coming into the market. Not good news. Not good news. And, you know, people want to buy a home, and increasingly they're looking to buy a home and stay there longer because the costs of moving are so high. So you don't want to move so frequently, do you? Stamp duty reduces the frequency of people moving home and therefore reduces social mobility, which is why it's the most stupid tax of all. It really is. Stamp duty on residential homes is the most stupid tax of all, which is why Singapore has no stamp duty for people buying a home. Yeah, that's it. Any questions, guys? Any quick questions before I go? Yeah, Jason Bourne, someone calling himself Jason Bourne, says leasehold should be abolished and converted to common hold. Well, that was one of this government's promises that helped to get them elected, but they are calmly managing expectations and pushing the can further down the road on that, and seem to be backpedaling and sidestepping their commitment to leasehold reform. Don't know why, but that's what's happening. All right, guys, thanks for watching. If you don't follow me on X, that's the place that I post the most about the housing market and all things affecting the housing market. If you are new to the channel, please watch my 10 golden rules of buying and 10 golden rules of selling. 10 golden rules, Charlie's 10 golden rules for buying and Charlie's 10 golden rules for home sellers. Google that video, those videos, if you're new to the channel. Otherwise, you can find all of my links on Linktree, which I've linked to below in the description. And otherwise, see you all very soon. Let's put my website address up on screen to finish up with here. Never got it handy. Got to scroll to find it. There it is. Yeah, any more information you want about me, there's my website there. Thanks for watching.